David, can you tell us a little bit about the geometry of Crestorum? Because as you were talking about that, and I'm seeing these tremendous grades, typically in a high-grade deposit like that, you have some very relatively tight structural controls, and it's harder to build a resource because you have to hit those structures sometimes at depth. And if you look at the Conan Giant, those are, multi-kilometer depths for some of those high-grade deposits. So do you have a good understanding of the geometry at Crestorum at this point to target that in your next drill programs?
We do. There's been a lot of drilling done at Crestorum, actually. One of the great things about being in a camp, as you had alluded to in the intro, you mentioned that this is a rediscovery in a way. Part of the benefit of having a rediscovery is the ability to work with a lot of data from the past. And in fact, the surface of Crestorum has been drilled almost like an M&I drill pattern. There's like 25-meter centers, but it's very, very shallow. So there is a good feel for the geometry. I think that there's also the need to look at these things with through a new lens, and certainly Gerald's got a different view of how this target should be drilled than perhaps the way we drilled it last summer. We put 6 holes into it. We did have high grade intercepts, but we didn't really take any big swings. So with the understanding we have and our sort of projection of where the deposit is going. Yes, it's narrow, but we feel by going a lot deeper, we could show that this thing, we could add a lot of ounces quite quickly.
And you will be drilling this summer, and you're financed to do that?
In order to drill the kind of program that we would like to drill at Crestorum, we probably need to raise some more money. We do have cash coming off the back of our current program. But we'd like to drill, 5 to 10,000 meters at Crestorum in order to add the kind of ounces we believe are there.
Yeah, and I think you have significant targets there. So that kind of a drilling program could turn out a lot of resource. I'd like to go way back now back to Andrew in BlackRock. Andrew, your presentation focused, I think, wisely on an acquisition, but you kind of skipped over your initial project, which, if we remember, that was the reason I first recommended the company in Gold Newsledge. So could you cover that just a bit for our listeners?
Yeah, no, absolutely. I'd love to. And I recognize I was a little thrown off for timing, just being put on the spot there. But so Silver Cloud, 45 square kilometers, right at the northeast tip of the Carlin Trend, right where it intersects the Northern Nevada Rift. So on one side of us to the southeast, you've got some of the largest mines in North America, and but very Northern Nevada Rift. Style mineralization, meaning low sulfidation epithermal. What that means is grade. Directly next to us is Hollister, and directly on trend of us in a north-northwest trending system is the Midas mine. Midas was such a good deposit that Franco-Nevada changed their business model back in the late 90s and ended up getting in the mine building and operating business. Now, what's interesting about Silver Cloud is, as I quickly mentioned in the presentation, what we inherited was effectively a time capsule because of a really onerous royalty deal that was attached to the lease for the last 15 to 20 years. And that was on the back of Teck and Placer Dome. When they drilled the project and they did 2 small rounds of drilling, they both encountered grade on 2 different targets, but this was in early 2000s. Gold was at $250, maybe $300 an ounce, and none of the majors really had the budgets to do grassroots exploration. So rather than give the project back, they tacked on their own royalties to the underlying lease and farmed it out to other groups. For the last 15 years, it had a full 10% NSR on it. There's in any other structure, this is a project that would have been drilled to kingdom come. This is 45 square kilometers on the richest gold mining belt in North America. There's no other juniors up there with anything like this because we're surrounded by major mining companies and intermediate producers that have been making gold for 20, 30, 40 years. What we have is probably the lowest hanging fruit in the district, and we're actually flanked by Hecla Mining. We've got on one side, and what's interesting about Hollister is the vein system goes east-west. Their veins go right up to our property line. Clementine, Guinevere, they're all going there. And this is one of the highest grade mines in Nevada when it was in its heyday. And Midas is directly northwest of us. What we have is 3 different target areas where Newmont, Teck, and Placer all encountered gold. None of them were able to follow up on them. We did 1 round of drilling last year. It was the first round of drilling the project had seen since 2005. I brought back as our head of exploration the former head of Placer Dome. His name is Bill Howell. He had oversight over all of Placer Dome's projects in Nevada up until they were taken out by Barrick in 2005. Bill had a discovery on our project. He had 12 meters of 5.5 grams per ton in 2002, but he lost his budget. Apparently, within those 12 meters of 5.5, he hit 12.5 grams over a meter and a half. Apparently that wasn't good enough for them back then. But he's been trying to get his hands on it ever since. And that's how I got Bill back in here. What we realized was that all previous drilling on the property was done under the idea that the vein system ran north-south like they do at Midas. Bill had a new look 17 years later after making his discovery, and he realized they were drilling the wrong way. Everything lines up east-west. Well, we've now got, we did a 5-hole program in October through December. We've now delineated about 250 meters of strikers, so trending in an east-west pattern. We realized we hit that at the top of the system. So what we recently, right before COVID, shut our program down was we drilled a deep hole, 678 meters, targeting the same structure we just got a good control of down at depth. We're trying to hit this thing in the boiling zone, but what we have right now is about 200, 250 meters or so of east-west trending mineralization with grade. We hit 8.5 grams per ton over meter and a half, lined up perfectly with Placer, 1.5 meters over 12.5 grams per ton. And now we're going deep there. We've got also at a 3rd hole to the east of that, which hit lower grade mineralization. We think it thickens up out west. So we canceled our hole 7. We're going to get back there at the end of summer. So we have assays pending for a deep hole into the structure. We want to get back there in August to drill it out west. And then we've got one of the sexiest targets in junior mining right now, directly west of the Hollister system. That's undrilled. It's called Northeast Veins. We've got 3,500 meters up there planned. No one's ever put a hole up there. There's a mercury mine. We found 8 veins outcropping at surface. They're loaded with mercury. They're bright purple. And we want to target that down around 250 meters below surface or so. We think it could be the western extension of what they've been mining at Hollister. So, yeah, this Tonopah is the lowest hanging fruit because we don't have to make a discovery. This is just picking up right where past miners left off. And our first program there is targeting a 24 meter wide vein. We've got a big program lined up for Silver Cloud. So.
Yeah, so that was enough for me to recommend the company initially, but wait, there's more. And so 2 great projects and news coming up shortly. We're getting some good questions coming in. Somebody asked for Group 10, if I'm understanding correctly, it seems that there are several Platreef-sized targets. And this is a good question. How were you able to acquire such a large land package? That's from Michael.
Timing. We had built a team that was focused on these black rocks, on ultramafic systems around the Wellgreen deposit, now Nickel Creek Platinum in the Yukon. Mm-hmm. And we completed this. Justin Modroux fellow reached out to let us know this was possible in Montana. He'd worked on this ground previously. There was a bankruptcy and the claims came open, and he staked the best parts and went looking for a partner. Thankfully, he found us, and we quickly saw the value there. His initial target, I think, reef-type systems. We were quick to bring in the Platreef model, and that resulted in that initial acquisition. I think it was 282 claims we first announced, 2017. And we got into the database and promptly doubled the land position before we really talked about it. We spent a lot of late 2017, 2018 just bringing together the layers of data and staking more claims. The more we got into it, the more there was. And thankfully, with the board that I have, we're well set up to go after this. So the short answer is timing and opportunity. These things are possible in the bear market cycles. We're issuance away from having 100% ownership of half of that district. It's fantastic. It also brought with it literally tens of millions of dollars worth of data, 30,000 meters of past drilling, including 12,000 meters of physical core, airborne surveys, soil surveys. It's the gift that keeps on giving. It's been great fun.
Yeah, tremendous targets, multi-kilometer targets, as you mentioned, Michael. That's going to take a lot of drilling, I would think, to get to a resource estimate. But you mentioned historic core. How does that mix come in? How much of that historic core will you use? How much will you have to maybe twin holes? What's the state of that core? You have assays, et cetera.
Yeah, the core we have is largely from the 2000s era, and thankfully we have the QP who drilled it, and we also have the core. So our 2019 effort was focused on relogging all of that and reassaying where necessary to bring that into the model. So that definitely saved us a lot of cost and time in terms of being the first to systematically apply this reef model to the Stillwater district. The holes that were drilled in 2008, for example, had generally been assayed over narrow widths and only for precious metals. So it was fairly simple for us just to take a broader view and bring in this Platte Reef thinking. The bigger question, our number of targets, yeah, we have a huge land position and a lot of targets, and that's why we focused on those three. As we got into block models in 2018, 2019, it became apparent that we can fairly quickly deliver mineral resources on those three main areas, Crow Mountain, Camp, and Iron Mountain, and revalue the company on that basis, raise money at higher prices, and then step out from them in terms of scale and grade. And that potential is all there. It's also worth noting that we've attracted the attention of basically every major you can name that's relevant to the space, particularly at our Core Shack events in Vancouver in 2019 and 2020. Those conversations are ongoing, and the right deal at the right time with one of these companies as a partner would be fantastic. In the short term, I think there's a lot of value that we can add just doing what we're doing. We expect to deliver those maiden resources this year and then expand them in terms of grade and scale after that. Should be a lot of fun.
Good. Lots going on there. Let's move on now to Chakana Copper and David Kelly. David, we've got a rapid fire, a few questions and one question here. Any ideas how metallurgy will work out as far as deleterious elements? Have you considered a name change to include gold? This is actually a question I had the other day for the company. And what other catalysts moving forward for the company? I think in that question, you can probably touch on the permitting aspect as well.
Yeah, so on the metallurgy, one of the programs that Goldfields brought to the table was a metallurgy program, and I mentioned earlier that they bring a lot of expertise, technical expertise in particular, and that program is ongoing. Unfortunately, it was shut down, during the COVID crisis. All the laboratories in Peru are currently shut down, but we have designed the program, and that will run. It's fully funded, and that will run through the rest of the year. We do know that the gold occurs in free form in the two instances that I showed in the presentation. It will be the type of project that will have metallurgy will be a key aspect of it. Some of the breccia pipes are gold rich, other pipes are copper silver rich, and there is vertical zoning. So I think that will be one of the challenges of the project. The aspect of mining multiple pipes at the same time and being able to blend ore is certainly something that this type of project lends itself to. But the metallurgy program will be a key part of the Goldfields involvement in the program, and we expect to advance that the rest of this year. The question about changing our name, I would change it, but if I change it, people would stop asking, and then we wouldn't have this conversation every time. So I kind of like not changing it, but we didn't really know what we were going to find when we got there. that gold was part of the system. It turns out this is one of the most gold-rich tourmaline breccia pipe systems that Doug Kirwan's ever seen. So it is, I think, somewhat of a unique aspect of the deposit style. It's kind of a nice thing to have both high gold, silver with the copper, and our copper grades in Breccia Pipe 1, were, if you put together a weighted average of all the drilling we did on Breccia Pipe 1, it was still right at about 1% copper. So we're talking significant grade copper with the gold and silver on top of it. We could change the name. I think ultimately as we go deeper on these Breccia pipes, they will become more copper rich because we are going deeper towards the heat source. And of course, a lot of people think that there's a porphyry system driving this tourmaline Breccia pipe system, and the Miocene mineral belt that we're in Peru is renowned for its copper gold porphyry system. So one can think that as you go deeper, you will see more copper in a system, a TRISI hosted system like that. In terms of catalyst, we have $6.8 million in the bank. We have 15,000 meters to go in our current drill program that will start up as soon as we can safely restart that program. And that 15,000 meters combined with what we've already drilled will constitute enough resource development or resource type of drilling to put out a maiden resource. And we do hope to get to that by the end of the year, but of course that will depend on a number of factors. So that will obviously be a big catalyst, a first resource on the program, all the results leading up to that, a lot of these targets. And then, into 2021, we have 92 targets that are defined on the property. I mentioned 23 breccia pipes, probably 40 to 50 if I had to guess, based on the number of blind pipes that we think are there, and a total target inventory of over 90. So we have a long way to go in terms of drilling. We know that drilling each one of these breccia pipes to a state that could have a resource on it they are drill intensive type of deposits. So there will be a lot of drilling to go. But I think we'll have steady, once we start drilling again, there's going to be steady news flow leading up to a maiden resource that will be a major catalyst for us.
Yeah, David, one of the things that really excited me when I first started, was introduced to the company a couple of years ago, was the fact that you had, I can't even remember right now, probably 10 or 12 pipes or whatever at the time, and your pipe 1 and pipe 5 were the big winners at that point, and those alone got you very close to what would have been the hurdle you needed to get over to get an economic level of resource. And since then, as you say, you've not only multiplied the number of identified pipes, but opened up this tremendous potential for hidden pipes. It just seems like they're popping up all over the place. I think permitting is a big concern of investors right now, or where that is and the timing of everything. I know that's very difficult to get a handle on, but do you have some color you could get the timing of whatever permits what permits do you need at this point to really attack the package and that new ground?
Yeah.
What's your feeling on timing?
Yeah, that's a great question, Brian, and that has been one of the issues for us is the delay in permits, and that's not just been Chilcana Copper, it's been all the junior companies operating in Peru. Peru does have a great mining law. It is a mining country, but it also has a very bureaucratic process when it comes to permits in the stages that you go through. And even an early stage exploration permit where you just want to go out and do some scout drilling to see if there, even that type of drilling in Peru has to go through a very lengthy permit process. We're about 9/10 of the way through the permit process that we started previously to drill that central portion of the project. I just found out today that the government is open for business and they are working from home, and that was something that initially they had not been doing. They didn't really have the capability of doing that. Over the last 4 weeks, they have sorted that out, and they are working for home. And our team that's looking after permitting for us had meetings today with regulators. They have a second meeting following up tomorrow. So my goal is to get that permit in hand before we come out of this. And so when they say it's safe to get back to work and start your programs again, that we have that permit in hand. And we already have an drilling drill rig on the property right now. We're ready to go. So it's really just a matter of finishing off that last part of the permitting, getting that while we're in this shutdown mode, and then hitting the ground running as soon as we're able to do so safely.
Well, good. Looking forward to that. Drill targets are obvious, and we know exactly where you're going next. Our next question is back from Michael with Group 10, and it's a very good question, and I'd like to touch on it a bit in answering it myself. What is the economic future for platinum group metals, considering the massive debt, both personal, government, and corporate debt? I just don't see any demand, yet I see China getting back to work and America eventually. Who's going to buy a new vehicle in this environment, for example? And of course, the PGMs, platinum and palladium, are a big part of their usage is in catalytic converters for internal combustion automobiles. What I tell people that I found is, everybody talks about electric vehicles, and that is a real trend, and it is going to be a dynamic trend for copper in particular. Is one of the big energy metals that's kind of overlooked, and that sector is going to. But what people who look at that solely have forgotten is that internal combustion engines are still a tremendous part of the market. It's still the vast majority of vehicles, and it's actually still growing. And so you have demand that has not only been steady, and surprisingly so for some of the new energy buffs out there. So demand has been steady, but it's actually growing, and it's also confronting some supply constraint issues. So I hope I haven't answered that completely for you, Michael, and that you have something else to add to that. So please do. Take a shot.
No, we agree. We're both bullish on the PGMs. Palladium was in a multi-year supply deficit, and it'll be there again. The car factories, as you mentioned, are reopening. Continued supply disruptions in South Africa, right? Closing of the traditional reef-type mines. They're deep, they're narrow, they're hot, they're dangerous. We've seen a steady erosion of supply, especially in platinum, also palladium, going back years, and that has to drive prices. That's supply coming offline. Most recently, Anglo's smelter, shut down even before coronavirus. So that's many hundreds of thousands of ounces off the table for palladium. More than that for platinum this year by Anglo's guidance. We're bullish. Palladium still worth more than gold, likely to go higher. Platinum clearly following. And I think you touched earlier on the ratio of gold to platinum and of gold to silver, actually, and they're both historically out of whack. Platinum last year saw terrific investor demand. In fact, it was put into deficit by the buying out of ETFs. And that's really good to see. That's the investment demand coming back to platinum. So that supply will drive that very nicely, in our opinions. We're bullish. We're glad to be there. The mines of Montana have kept turning through this whole downturn. Pleased to say they did change their operations somewhat, but unlike other jurisdictions, they kept producing. So all good.
I'd like to just add to that the feedback I've gotten, not directly, I must say, but indirectly from some of the big PGM producers out there, is that they are very bullish on the metal and seem to be looking more and more at M&A because of the supply constraints. Obviously, you want to get in better directions. And I look at, and one of the reasons why in Gold Newsletter, I've made a push over the last, 6-7 months or so to add some more PGM exploration companies to our portfolios, because I see this window of opportunity over the next couple of years. And there's just not a lot of horses in the race, and I think they're all going to be winners, at least the major ones, at least the ones that I'm recommending in Gold Newsletter. Really, in a couple of years, I think these companies are going to be snapped up by the majors at significant premiums. And if there's a race in any regard, it's not amongst each of the companies, but each company itself to build as much in premium before those offers and those bids come in. And that's
exactly right. Yeah. And just maybe to add to that, we've seen Sibanye buy Stillwater for $2.2 billion 2017, and Impala Platinum buy North American Palladium for $1 billion just last year. So as you mentioned, these South African giants are eager to diversify. and get exposure to North American PGMs.
Well, that brings up the natural question. Then, have you talked to your neighbors much at all?
Yeah, we've talked to basically everybody, and certainly our neighbors. They're mining just a few hundred meters to the north of us, and they've actually expressed interest in further acquisitions, including in battery metals, which of course we are part PGMs and part technology metals. And they run that facility up in Columbus that is a copper nickel sulfide smelter. So there's very good fit there. Yeah, we've talked to them. I can't comment really in detail on the status of a number of conversations we're having, but we've definitely got the attention of the majors. Interesting to note that many of them like the PGMs. A lot of them also just like the nickel and the copper aspect, and they see the PGMs as being a kicker on top of that. Mm-hmm. So we're well positioned, I think, in terms of being in the U.S. in the right district at the right time.
And I think that leads into another question that I'm actually going to expand to all of our panelists here. There's a few different business models in the junior exploration industry, and one of the ones that's really gained in popularity has been the prospect generator model, where you just do enough work to get interest on a project, to get interest of a major who then comes in and funds the expensive part of the exploration, primarily drilling, hopefully through development, and means that the junior company does not have to dilute themselves to fund that themselves. So let's go back to Andrew of BlackRock, and then we'll go to each of you in succession, and tell me about that. Are you looking, all of you are drilling on your own nickel right now. And so looking at the size of your targets, and Andrew, and specifically the two separate projects that you have you entertained that idea of joint venturing these? And obviously I can't get into any specific discussions you may have had with any companies, but is that a business model? Is that something that you're looking at as a potential? And if so, at what stage would you kind of hand that off to a?
No. No.
We have some time to kill, Andrew. We need a little bit more.
Listen, the first thing I did when I stepped into BlackRock a year ago was I put a firm no to a deal that was proffered, and it would have been absolutely sucked away all the upside for BlackRock shareholders. In fact, I knew what we have. Having a minority interest in two, keep in mind, both projects that we've had, these are major mining potential projects. How do I know that? Silver Cloud, even though it's a grassroots project, it's only ever really been explored by major mining companies. And I'm talking about Newmont, I'm talking about Placer Dome, and I'm talking about Teck Resources. Now, they've given us enough strings to pull at where we think that we can work our way towards something that, as I said, there's so much smoke up there that next time I go, I'm probably going to want a fire truck to guide me, because I think we're so close to something big. And again, keep in mind, I've got a major mining guy running the show down there. Bill Howell used to run exploration for Placer Dome. He's got a discovery on a project up there, and down in Tonopah, which is a brownfield target. I mean, this was one of the most significant mining districts in the United States heyday. And as I said, Core Mining, $1 billion producer, they had a portion of our project, probably the least exciting portion of our project, where they had none of the historic production, and they were tasked with making a new discovery. And even that is exciting enough to get me out of bed. We've got so many people throwing us money right now. There's so much anticipation that, frankly, it's embarrassing we're trading where we are right now. The board I've put together, this is literally every single person involved with the company. This is by far the biggest annoyance to them. Everyone's involved with plus $100 million companies. David Lang, the guy who I just brought on, he's the last piece of the puzzle we brought on. This guy's worked with everyone from Ross Beatty to Mark O'Day to Christian Malaud and Neil Woodier to Frank Justra. I mean, this guy's a powerhouse in terms of mine builders and mine operators. This is a company that's poised for the next leg up, and we've never, I guess the short-term future's never been brighter. Do I want to give away our upside to have a minority position in something? No, our targets are too compelling.
That's not a popular opinion in junior mining circles, so I appreciate you sharing that. And
I hold 3 million shares, and I control about 5 million fully diluted. That's not a popular way either, but I've put more money into the company than I've taken out since I joined, and I came in as an investor. I'm here to preserve the upside for investors. I'm not here for an easy way out, and I'm not here to have a major pay my salary for a few years while I'm off on a beach or around here. So.
And I was going to say that I actually agree with what you're saying that to a very large degree, because junior mining speculators do like they're investing in this sector not for dividends or income, but for very strong upside. And I do recommend a lot of prospect generators and understand that part of a business model. But the way I've always put it is it's a business model and not a religion. And that if you have obvious targets in front of you, you can build so much value with at least a few drill holes of your own. Then you need to do that. And some of the most prospect generators of the past couple of decades really took off when they finally decided to drill their own target because they just liked it so much they wanted to put their own holes in it. So let's move on to Chicana, which is, obviously drill targets there, David. And have you been I guess I can't say have you been approached for joint venture, but is that something you would consider if the right deal came along, or do you see so much potential right in front of you, or I guess specific milestones you think you can hit on your own before you would consider that?
Yeah, we have had our door beat down almost from the beginning when we started putting out the drill results in 2017. But it just, as Andrew mentioned, it just doesn't make sense for a company that's well funded, and it's for us, it's our sole asset, right? And I guess from my background, I spent 22 years with the majors, and with really the single focus of identifying from the M&A standpoint the best projects out there, so that you could short circuit that discovery timeframe. When you look at how long it takes to make a discovery and get it into production, it's tremendous. We're talking 15, 20 years in many cases. So to be able to short circuit that, you need to find the best projects that are out there. So when it came time to put Chicana together, it was really let's go out and find the single best project that we can find in Peru. In fact, we were looking all throughout South America, but Peru was our preferred focus area. And that became Soledad. And I think the results that we generated kind of prove that approach does have merit. Also, you have to look at it from the standpoint of what are you exposing your shareholders to in terms of upside. And if we can turn a discovery into an asset that's coveted by the major mining companies to the point that they will come in and buy you out. And John Black is a great example of that. Look what he did with Antares. He sold it, for I think $570 million. So, that becomes the model that a lot of junior companies aspire to, and we're certainly no different. Bringing Goldfields in was huge for us because it validated the project. It brought us capital. It demonstrated that they were willing to pay a premium to have a seat at the table. But we were very careful in the way we structured that deal. It was an investment only. They have no future right on the project or the asset. They do have a right to maintain their shareholder or their share position with future financings, and they have a seat at the table, right? And so they see the program develop. They provide a lot of input. So that's the model we prefer, and we think that that's the best model to put forward to benefit the shareholders that have been with us, from the beginning and continue to join us today.
Yeah, and as you mentioned, kind of short-circuiting things to take an exploration project and kind of fast forward it, you need structure in the area, and you obviously have that. A mine adjoining your ground. So on that note, David Suter of Goldterra, infrastructure has to be one of your high points. And, given that, is that something you're looking at as a potential JV, or do you have much resource in front of you that you really want to take a few bites at that apple before you consider it?
Brian, you must have chosen your audience to sort of be aligned here. Certainly, I echo the thoughts of my peers here. We're entering a multi-year bull run in gold. And, those of us on this panel, I think, are very fortunate to have extremely good assets. Everybody here has assembled, very good management teams that are capable generating shareholder value. So again, also as a shareholder, and working for my fellow shareholders, it would be crazy to give away the upside this early in the story. I think when I first came along, there was a lot of type of activity. It was the tail end of a lot of majors investing in portfolios of junior companies. That was really sort of the only source of funding. But fortunately, we're starting to gain leverage and traction, and we're seeing a market where investors can buy shares and fund the finding of gold ounces quite cheaply, which is what we're trying to demonstrate at our project this winter. If we can add significant ounces at Sam Otto for the price that we're able to do so. You mentioned infrastructure. Infrastructure gives us an edge of over a lot of other northern remote stories. It cost us about 225 meters all up to drill in the Northwest Territories, which is maybe a little bit more expensive than some of my peers on this panel, but it's a heck of a lot cheaper than it is than other places in the north. So if you take those things into consideration, to go into a JV or even to allow a large stake in the company, I think we wouldn't be doing anybody or ourselves any favors. So look, we're right on the doorstep of 14 million ounces of past production at half an ounce grade, and we own the front yard and we own 40. So obviously there's attention, and we're trying to beat that attention back, and it's also a big part of the reason why we keep bolstering our team to show that we can do it ourselves.
Great way to put it, David. And so why don't we close? We're right on our limit here on time over, but why don't we close with Michael, because this is an obvious question for you. You've got these multi-kilometer targets, a number of them, 8 in total so far. Take a lot of money to drill all of that, but a few drill holes well placed here and there in building a resource can get your value up there. Again, we've touched on your natural interest from your neighbor. What's your view on joint ventures at this point, or at this stage, or at what stage would you consider that?
Well, later. Stillwater, the database that we have, the drilling we did last year, we've reserves of that type at this early stage. We see a lot of value we can add ourselves, is the short answer. If the right deal came along this year, we'd do it. I don't necessarily see that. I think it may be a year or more out. We see lots that we can do ourselves. On our other assets, definitely. And we continue to attract interest more than ever, I think, lately, in the Yukon, PGM nickel copper projects, and especially the Ontario gold asset, which adjoins Treasury Metals and First Mining's Goldland, right? It's a good district. Those projects, we own them 100%. We're definitely interested in earn-in structures, for example, on those. And low carrying costs, so we don't need to rush anything, but we'll do the right deal at the right time on those. I don't think we're getting any recognition for our non-Stillwater assets on our balance sheet. So there's some good upside to be realized there. We're definitely in an improving market, and the appetite is coming back. So it's a lot. There's Stillwater the focus, and we're holding on to 100% of that, and we're even resisting royalty and streaming deals as well, in addition to JV structures, just to advance it ourselves for the time being. At some point on the right terms, we definitely will see it into bigger hands.
Well, great. Thank you, Mike. Thanks to all of our panelists. We're running a bit over time right now, and in fact, my dog is at the door scraping to go out, and will start barking at any moment, or something worse. So we're going to have to wrap this up. I'd like to just stress again that we're in the early stage of this. We have 4 very exciting companies here, and that I think are going to make a lot of news this year. And in general, the sector is as exciting as I've seen it in my far too long career in the business. So this is a time to get involved. This is a time to take the effort, make the effort to get to know these companies and start building up positions, because there's plenty more to come. So thank you again for attending, and really appreciate your interest, and see you next time.